Hi, Dave Feldberg, Coastal Real Estate Group. I'm here today with Beny Rabuchin with New American Funding. Today we're talking about interest rates and ultimately how they affect your mortgage payment.
Sure. Good question. It's a real hot topic lately with how volatile our market has been.
Sure.
So interest rates change on a daily basis depending on market activity. And at times, interest rates can change multiple times a day. So those that are not locked into a rate, or for example, if they're pre-approved at a certain rate because they want a certain payment, any sort of market swing could change that. For example, if you have a $400,000 loan, if the rates that day change for the worse and they go up, let's call it an eighth of a percent or a quarter of a percent, your payment can change from $30 to $60 a month. So if you have a certain payment that you want in mind, know that rates change daily, and if rates move for the worse, it could put you out of your comfort zone pretty quickly.
Sure. So you can lock your rate?
Sure, yeah, you can lock your rate in. That will protect you from any potential market swings that can happen. So highly recommended to lock a rate when you're in a position to do so, and that would be entering escrow to buy a home or refinancing your home. The idea is to lock that rate in as soon as possible.
As soon as possible, right? Rather than float.
Yes.
Okay. Good tips. Dave Feldberg, Coastal Real Estate Group. Thank you, Beny, and call us if you have any questions.